Hi, this is Shaheedah Hill with Maximum One Realty, getting you over the hill to home ownership. Today I'm giving you my top 20 tips that I think all homeowners should be using, all first-time buyers should be using. Thank you so much for liking my channel, subscribing to my channel. I chose 20 because I'm at 20,000 subscribers, so I definitely appreciate you. I appreciate your comments. I try to respond to as many of them as possible, sharing my videos and sharing my page. So let's get right into it. Number one, get an estimate from your lender before you put a contract on a house. You want in that estimate your estimated closing costs, how much your monthly payment is going to be, all of those things, so you're fully aware of what you're going to have to pay at closing, what your monthly payment will be in full ahead of time. Because a lot of people, they get the pre-qualification, oh, I'm pre-qualified for 190,000, and then they go about shopping, but sometimes they forget, okay, what do I need for closing costs? What do I need? What's my actual payment going to be? And sometimes some lenders automatically give you an estimate when they give you the pre-approval, but a lot of lenders don't. So you need to ask for that pre-approval at the time that they qualify you. Not that pre-approval. Ask for the estimate at the time they qualify you. Number two, get 3 lender quotes. Do not just get one quote. I know what most people say is, it's going to hurt my credit. The FICO scoring model allows you to get multiple quotes within a short time period for the same financing type. So all mortgage lenders, when they pull your credit, they're pulling your credit under one finance type. Don't know what the number is, but say the number is 3. They're all putting in 3. So the FICO scoring model knows that you're applying for 3 different mortgages. So it only impacts your credit once. You can double check that. You can look at it. What I recommend is that you do it within 14 days. You'll find various things that might say 30 days, but 14 days is to be on the safe side. I would say do everything within 14 days. So verify that, but definitely get 3 quotes so then you know who's giving you the best rate and the best terms for your loan. Don't just go with the first quote that you're given and you have no idea could I have gotten a better interest rate or lower fees somewhere else. Number 3, if you're a buyer, you need representation. Don't go with the listing agent or the builder. Make sure somebody is representing your best interest, especially as a first-time home buyer, that's able to guide you through the process. Whether you're doing new construction or resale, have your own agent representing you. It's at no cost to you. I have a video. I think what explains it best is probably new construction video. I kind of talk about why you should have your own agent. All right, number 4, there are only 4 loan types. So I want to make that very clear. When you're applying for a mortgage, you're either applying for an FHA loan, and I have the FHA loan video, a conventional loan, a USDA loan, or a VA loan. There are only 4 types of loans. Now, in like FHA, there might be different programs that a lender might have that fall under FHA or that fall under conventional, but there are only 4 loan types. And usually you can take away 2 of those types because VA is for veterans and their spouses, or USDA is in rural areas. So most people are qualifying for either FHA loans or conventional financing. All right, number 5, owner occupancy. So most mortgages, you're going to get the best rates and the lowest down payments if you're going to owner occupy that home. So you are going to actually move into that house. And how do they know you're going to move into that house? Generally because you signed saying that you are going to move into the house. And also they know you have a job that's very close to where the location of the house is. So for example, if you are living in Arizona and you're trying to buy a house in Texas and you don't have a job yet in Texas, that's not owner occupancy unless you can prove that you are a remote worker, which a lot of people have moved to virtual. If you get some kind of verification from your employer that you work remotely, then that's possible. But a lot of time when you're moving out of state, that you're not considered an owner occupant until you have a job in the state you're moving to. That's how they know your intention to move to that state because you're employed in that state, and that's generally how they verify it. Now, you can purchase a property anywhere, but some of the things you're going to find it's going to be a much higher down payment for a non-owner occupied mortgage, and probably a little bit higher interest rate as well. So that's why first-time home buyers, if you're intending to buy in another state, you need to think about how you're going to get employment first in that state, or if you're a virtual worker, that you're going to be able to verify that with your employer, verify it with the mortgage lender. Number 6, student loans. If you have student loans, they will impact in some way or another your debt to income ratio. So you need to make sure that if you're not on a plan that allows you to pay off in full with your loan with your current payment, so say you're on a 10-year standard payment plan, they'll generally take that payment. But a lot of people are on like income-based plans, and they are not going to take your income-based payment necessarily, depending on your loan type. There's a video about that. So you want to, if you're not paying your monthly payments in full, you're in some kind of modified payment plan, that could affect your ability to qualify, because the lender may look at that and say, well, if it came out of one of those plans, would that person still be able to pay their mortgage? So just think about that with student loans and work that through with your lender prior. Don't wait till the last minute and then be surprised that you are not able to qualify based on your student loans. All right, number 7. There are two, what I'm finding is if you're looking for mortgage options that are very low down payment, one would be FHA. FHA is 3.5%. Another one would be, that's conventional, is the conventional home ready mortgage if you qualify. So home ready mortgage is a conventional loan product that allows you to put 3% down. There are some 100% financing options. They're not as many, everywhere, but you can find some 100% options. But usually what I find is usually a higher interest rate if you find something at 100% financing. All right, number 8, know all 3 of your credit scores. There are 3 credit scores: Experian, TransUnion, and Equifax. You need to know all 3 of those because the lender is going to look at the middle score. So when they're evaluating your credit worthiness, they're generally going to look at that middle score. So make sure you know your 3 credit scores. Number 9, utility payments do not count into your DTI. I did this video about, can you afford a house? And that's like probably the number 1 question I get when I'm trying to show people how to calculate their debt to income ratio. They're asking me, what about my utility payments? Or what about my rent? Or what about my cell phone? Whatever that is, they're not included because you didn't borrow that money. So it's not considered debt. So when you're looking to calculate your debt to income ratio, you only include instances in which you borrowed money. Okay, that's number 9. Number 10, do a budget. Do a budget with your spouse, do a budget by yourself, and budget out how you're spending your money, especially as you get into trying to save for home ownership. You should be living on a budget, a written budget every month. Number 11, buy a house before you buy a car. Let me say that again. Buy a house before you finance a car. I mean, you could have a car and you pay cash for it, but a lot of times people are buying very expensive cars and then they can't afford a house because their car payment is too high. So car payments or cars are depreciating assets. They're going to go down in value as soon as you start driving them. So it's if you're really trying to build wealth, you want to prioritize a house if you're going to buy one over a car. So, and then be very mindful if you have to finance a car. I got my last few cars. I got one from my dad that he was about to, he didn't want to have 2 car payments, so I got it from him. Then I got another car I paid cash for it, $5,000 after that car stopped working. So find a way to, get a car cash if possible. And if not, get the lowest payment you can find, because when you're trying to calculate your debt to income ratio, if you have student loans and a car payment, there's not a lot of room left for a mortgage. So the less debt you have, the better. Okay. Number 12, file your taxes. You'll be surprised how many people, especially first-time home buyers I work with, that have not filed their most recent tax returns. I didn't even realize this until I started working with a lot of first-time home buyers. A lot of people don't file their taxes, and when it's time for them to when it's time for them to get their mortgage approved, they're scrambling to get their taxes together. File your taxes, particularly if you owe, and then save all of your paperwork. They're going to look for the last 2 years. If you owed in the last 2 years and you make payments or in a payment plan, keep all of your paperwork, your IRS tax transcripts. The IRS will hold you up from closing on your house because the lender may ask for something. They definitely always want verification that if you owed, you actually paid what you owed. That comes up a lot where a lot of my clients in the underwriting process have to verify that if their tax return said that they owed even like $30, $500, the lender generally wants verification that those taxes are paid. So make sure you're filing your taxes. If you're self-employed, you need to talk to your accountant, or I would have a professional do my taxes when I'm preparing to buy a house, because you're going to need 2 years of tax returns showing your income in order to qualify for a house, especially for anybody, but self-employed people really need good documentation of their income. All right, number 13, this is another tip. If you're in college and you want to buy a house right out of college, your college generally counts as 2 years of employment. So say you went to school for nursing, you get your first job, and you're like, oh, do I have to have 2 years on the job? Usually not, especially for teachers, any kind of stable employment. If you go straight from college to your job, you do have to have a job, but your college counts for the 2 years of employment that is typically required by mortgage lenders. Number 14, always get a home inspection. Never buy a house without a home inspection. Number 15, always get title insurance. Title insurance ensures that if the title for some reason is not valid at any point after you buy it, the title insurance will protect your interest in the home that you buy. And I did a closing attorney video here that talks about the importance of getting title insurance. Number 16, you choose your attorney. A lot of people don't realize this, but especially on the buyer side, most of the time, especially if you're buying resale, like buying a resale home, you get to choose the closing attorney you want to use. So, and closing attorneys may have various prices. So go ahead and choose one that doesn't have really high fees, because that will cut down on some of your closing costs. But you generally get to pick your closing attorney or your title company when you're closing. So ask your realtor about that and have them give you some recommendations. Usually with new construction, if it's a large builder, they make you use their closing attorney or their recommended or preferred closing attorney in order to get the incentives. All right, number 17, renting has its place. I don't think people should be really long-term renters if they plan on building wealth, but renting has its place. If you're not in a stable place, I did a video called Should I Rent or Should I Buy? So watch that video. Renting at all times is not bad, okay? So renting does have its place. You may be in a place of transition. You may be in a place of savings, but renting someplace gives you some time to save and establish before you buy a house. Number 18, real estate is long-term. Unless you're either a homeowner that you're buying for yourself, and then over the long term, more than likely that home is going to increase in value, or you're an investor that wants a quick flip. And that's a different way to buy property. So you need to see, okay, am I a homeowner that's going to build over the long term through real estate, or am I an investor that wants a quick flip? Because the way you're going to approach buying is going to be very different. Typically, at least right now on this channel, I'm talking about people that want to live in their house for at least 5 years or more. Number 19 is NACA. I did a whole video on NACA because everybody asked me about it. It's a real program. People buy their houses through them. It is a process, but it's one of the mortgage programs for first time. It's not even first time home buyers. You just cannot currently own a home. But NACA has its highs and lows. That's why I did my video like this. There's some good things about NACA. There's some bad things about NACA. But it does give you an opportunity to get a mortgage with no down payment and no closing costs and no PMI. So those things, if you're trying to find an affordable option, then NACA may be an option for you. And you can read the comments. Some are good, some are bad about the program. All right, number 20, there's really only 3 things that you need to get a mortgage: income, credit, and low debt, or your debt is going to be evaluated, okay? So depending on your debt to income, remember that debt to income ratio, it depends on what kind of house a lender will qualify you for. That's very important. It's one of the things that people, I think, need to go ahead and calculate, because a lot of people ask me, well, I make $40,000 a year. Can I qualify for a house? Yeah, you could qualify for a house probably, but if your debt is if you have debt that's more than 60% of your income, you won't be able to qualify, because where does that mortgage fit in? So you have to, those 3 things you need to evaluate for yourself. You need to evaluate your income, your debt, and your credit. And typically, once you have all of those in line, you should be able to qualify for a mortgage. And then I'm at number 20 already. So I'm gonna give you a bonus. Number 21. When you qualify for a mortgage, make sure that through that mortgage process, it typically takes about 30 days, maybe 40 days to close a loan. Make sure you're in the same or better financial position until you close. For example, when you first did the application, you were employed. Hopefully you were employed. You had a certain amount of savings. You had a credit score. All of those things. You had a certain amount of debt. And if they approved you based on, everything they saw during the pre-approval process, you need to make sure during that process that nothing changes. So you don't go out and buy cars. You don't go finance your new refrigerator, your new furniture. You don't do anything that's going to increase your debt. You want to stay on your job, preferably the same job, because if you change employment, then they have to re-verify all of your employment. So you want to be very stable. You want to be the same way they saw you on the application. You want to be that same way or better when you're about to close, because I've seen people who were working and then, especially in this environment, they get furloughed or something happens and they can't qualify, or they go out and buy something or charge something. Now they're not qualified. So you want to make sure that you stay very consistent financially during the process. Thank you so much. I hope these 20 tips were helpful. Please watch my videos if you want more details. Thank you so much for subscribing to my page, sharing my videos. I really appreciate it. Until next time, I hope you learned a lot and that you confidently buy your first home. Thank you so much. Bye-bye.